Hey, what's going on, everybody? Thanks for tuning back into another video. We're just going to get right into it. It's going to be a very comprehensive but very interesting video, I think, for a longer term time frame investors, and kind of give you my long-term outlook on the crypto markets and Bitcoin as a whole, because most people are looking at these cryptos and just saying, oh, where's it going to go tonight? Where's it going to go tomorrow? And I'll kind of touch on that real briefly at the beginning of this video. And then I want to get into the longer term time frames, kind of how the global fiat currencies are going to be, like, I'm expecting a massive wealth transfer from all of these global fiat currencies into crypto at some point in time. And I'll kind of give you my thoughts on that. So obviously with Bitcoin, we're sitting at 72.38. I'm looking for, we busted through the 100-day EMA, which was really nice. It's looking more and more bullish as we get through these different channels that we drew in a previous video. But I'm still kind of waiting to see if we hold this 71.36 support line, because if we don't, it is possible that we're still in that WXYZ corrective phase with this as a 1, 2, 3, 4, 5 wave up. But we'll kind of have to wait and see. I'm getting a little less confident in that negative call that I just spoke about, the WXYZ, just due to the fact of the symmetry with the timeline between each subwave. So that's something this is not really a technical analysis video. I just wanted to kind of touch on this. We've definitely had some nice bullish volume here with this bull flag, but let's just kind of dig back into this. So what is going on with Venezuela? Their currency has lost 95% of its value over the course of a year. That's insane, right? Like that, everybody thinks like, oh man, poor people. And it really is. It's awfully sad for these people who live in Venezuela, live in Turkey, live in, Brazil is on the teeter-totter like we've talked about. Greece, all of these other countries are experiencing massive economic sort of failures with their monetary policy. And what they've done is, we've talked about this in the past, is cryptocurrency experts have said that the Petro, which is their crypto that Venezuela launched, suffers from a lack of credibility because of lack of confidence in Maduro's government and the mismanagement of the country's existing national currency. So to me, these governments are starting to come out with these cryptocurrencies, but to me, it doesn't seem like that is the best alternative, because this is basically like telling a Ponzi scheme artist, hey, go start a real business and, we'll trust you. Well, they just don't know how to do that. Like, they're Ponzi scheme artists, right? Like, they've been doing this for years and years and years. How can you expect them to create some true, backed currency that people trust? And so to me, I think a lot of these bigger countries, the US included, will probably entertain the idea of creating their own government-backed cryptocurrencies. But I think there's going to be a massive pushback, massive problem when this sort of thing starts to come out, because by that point, and I think we're probably already there in the United States, where people are starting to wake up and understand this fiat currency crisis that we've been in for quite some time. But I think the massive wealth transfer will come into cryptocurrencies because of the decentralized nature, the fact that you kind of control your own finances. And the biggest issue, I think, right now is that Bitcoin in particular, this is obviously the best and most qualified candidate at the moment for people to transfer their wealth into. But the biggest issue, Warren Buffett has spoke on this, is that Bitcoin is not a currency. Bitcoin is a speculative asset at this point in time. Bitcoin's price lost, 75, 80% of its value over the past year. So it's clear that it is very similar to something like the Venezuelan currency or fiat currency, in the fact that it is not stable. It doesn't mean it can't be stable in the future. It just means it's not stable now. And I'm actually looking forward to the day where it does become stable. And, if you're involved in Bitcoin now, the market cap's only 123 billion. Just imagine the trillions and trillions of dollars that would need to pour into this for it to become stable. And that'll be interesting. We've talked about futures markets, ETF stuff, which can drive that sort of volume. But I think the biggest thing that's going to drive a lot of volume into Bitcoin in general is going to be these fiat currencies sort of tumbling. And this is an interesting article, the national debt by year compared to GDP and major events. So So in 1971, the United States came off of the gold standard. Nixon basically put the gold standard on pause, and it's been on pause for like 40 something years. So that's something that we can kind of laugh at, but it's going to be not a laughing matter when this whole sort of Ponzi scheme comes to an end. And I want to touch on that. So under the current U.S. Monetary system, what the United States does is we borrow money from the Federal Reserve, and the United States promises to pay that back plus interest. Sounds great, but the biggest issue with that is in 1971, when we came off of this gold standard, we basically just invented money out of thin air. The money is not worth anything anymore. The money is just a piece of paper. So when you borrow that piece of paper for the first time in history, say you borrowed that first dollar, how are you going to ever pay that first dollar back is the real question. And the answer is you borrow more of that same dollar, those same dollars to pay your first loan back. And you have to borrow more and more every time due to interest. And, some people will argue and say, what about, economics? What about, all of the economy generating a ton of money? And yes, that's true, but I'm just trying to dumb this down as simple as possible to give an idea of what is actually going on. So since 1971, the United States, as you can see here, has been running a massive trade deficit with the rest of the world, meaning that the United States is buying many, many, many more times as much as we're exporting, right? And so this becomes a big problem because what happens is we pay these other countries, China, Korea, Japan, we pay them in US dollars for their goods and services. And what they do with those dollars is they don't put those dollars and exchange them into their own national currencies. Because if they did that, that would inflate their own currency value and it would inflate their economic status, right? And then they would be less desirable for us to trade with. We are the biggest consumers in the world, the United States, right? We just buy. And so what these other countries are doing is they're taking advantage of that. And they're basically buying our U.S. government bonds, which is basically us getting that money back and saying, yeah, we'll pay you back plus interest if you give us this money back. So now they're still very desirable to trade with. And they are basically just giving us our money right back in terms of a U.S. bond. Now, it doesn't necessarily seem all bad, except for the fact that the United States borrows all this money from the Federal Reserve. So that becomes an issue in itself. And it's a classic sort of Ponzi scheme. It's obvious, right? And the biggest issue arises with hyperinflation. And so as you can see here in 1971, our GDP to national debt ratio was 34%. Not too bad. You kind of can scroll down, all the way to 2018. We're looking at 107% of our GDP to national debt ratio is what we're looking at right now. And this is getting uglier and uglier by the year. And it says Trump tax cuts and spending above can't say this word. Congress suspended the debt ceiling until 2019. So this is kind of the note that I want to touch on a little bit is just the fact that they're suspending the debt ceiling, pretty much seemingly every year it's going to continue to get extended, and then our debt is going to continually rise and rise. But this isn't the end of this giant Ponzi scheme. It kind of even goes deeper. A lot of people will say, why not just go back onto the gold standard where our dollars are worth X amount of gold? Well, the difference is we kind of gone too far, for one. And for two, the government, if they did that, wouldn't be able to promise something for nothing. Right now, the government can literally just promise something for nothing. They can borrow money for free. They can, print new money. And, this is a very dumbed down explanation. So I just don't have enough time to get into the more microeconomics of all of this. But what happens is instead is these governments, these central banks that are holding a ton of gold, what they do, and this is another wrinkle in this Ponzi scheme, is these central banks actually lend their gold to these bullion banks. And what bullion banks do is they buy gold at X amount of dollars, and then they sell that gold to someone else with the expectation of buying that gold back at a lower price in the future. And what these bullion banks tend to do on a large scale is buy back US government bonds. Now, the biggest issue with this is the US central banks, they changed their accounting methods a few years ago to, they basically count the receivables and their actual inventory as one line item. So they lend this gold out to the bullion banks. The bullion banks then sell this gold for US government bonds. And that gold, they're counting it as one line item. And it's just like accounting fraud pretty much. So, it becomes a big issue. And when somebody, when tons of people want their gold, basically what happens is a ton of different people think that they own the same block of gold, right? And so that becomes another wrinkle into this big sort of Ponzi scheme that we've been looking at. And another wrinkle is a lot of people think that the central banks of the most powerful countries in the world have been suppressing gold prices. So that way to sort of instill more, confidence in fiat currencies. The problem is they haven't done a terribly good job of that because gold prices have been increasing. There was a stint between like 2002 and 2008 where gold prices were massively being suppressed. And that was due to a lot of these, central banks selling a ton of their gold and just dropping the price. But, I think a lot of other countries have started to catch on to kind of diversify their portfolios from the United States dollar. But that's what I'm getting at with these bullion banks is the fact that these other countries are intertwined with the United States dollar makes this not just a United States problem, it makes it a global issue. And what that relates to us in terms of cryptocurrency is the fact that if we start to see hyperinflation in the US dollar, which I'm not saying is going to happen today, tomorrow, next year, 5 years, it could take 25 years, it could take 100 years, I don't know. But when it does happen, inevitably, due to this fiat currency crisis that we've seen time and time again, it means that hundreds of billions of trillions of dollars are going to need to go somewhere. And I'm looking at this as sort of a huge, massive, long play on crypto in general, because a lot of people are saying, the biggest outlet for buying or hedging yourself against these hyperinflative fiat currencies is buying gold. And a lot of people claim that that's the best possible thing to do. Personally, I disagree because what can you do with gold? You can't go into a Starbucks and buy a coffee with a gold coin. What you can do though is you can buy Bitcoin, and slowly but surely the infrastructure is building and you can use Bitcoin to buy things now. And the argument for gold was, hey, gold 2000 years ago took X amount of manpower to mine from the ground. And it's still the same way today. So gold's value actually does hold true over the course of very, very long time frames, right? Whereas the US dollar is basically, it's also just a speculative investment, as crazy as that sounds. It's a stable, quote unquote, for now, investment, or not even investment, but currency. But Bitcoin actually provides the same sort of value as gold does. And that's why they call it the internet gold. But the idea there is Bitcoin takes X amount of computing power to mine a Bitcoin. The difference between, I guess, Bitcoin and gold are very, very similar in that regard, because the mining takes X amount of power to do something, right? And then you have, the fact that Bitcoin is deflationary. There will not be more than 21 million Bitcoins ever mined. And so when we get to this end goal of 21 million Bitcoins that have been mined, that is when I could see, the price becoming severely stable. And that is when Bitcoin could probably transition not only from like the digital gold, but maybe even to a worldwide sort of safe haven currency, to kind of protect ourselves from the wrongdoings of the central banks and the governments, right? So that is kind of my super long-term overview of kind of how the central banks and everybody, all these central banks around the world are really just raking the average citizen over the coals. But I wanted to just get that out there And if you guys like the video, comment and give me a like, and I'll catch you guys in the next one. Take it easy.